Today on Market Journal, past figures show Nebraska farmland values decreasing. Is the trend continuing? We'll pour through the numbers of this year's farm real estate report. The demand for solar power is heating up across many industries, including agriculture. Hear if it's something you could implement in your operation. And if what to do with your extra grain is keeping you up at night, you could be a victim of the marketing mind game. Our expert has some tips to reduce the anxiety. This week's edition of Market Journal starts right now.
Market Journal, television for agricultural business decisions, is a presentation of the University of Nebraska-Lincoln's Institute of Agriculture and Natural Resources.
Promotional support is provided by the Nebraska Farmer Magazine.
Hey everyone, I'm Troy Moling, and thanks for joining us today on Market Journal. Hope you're having a good day. We've got a jam-packed show of some of the hottest topics in ag for you this week. And kicking it off, preliminary numbers show Nebraska farmland values decreasing in 2018. UNL's Department of Ag Economics has released this year's findings in the annual Farm Real Estate Report, and that tracks overall land values as well as cash rental rates. Nebraska Extension Educator Jim Jansen is one of the survey's authors and stopped by to talk about the most recent data.
The Nebraska Farm Real Estate Survey, along with the reports that come out, preliminary estimates comes out the second Wednesday in March each year. The final report comes out in June. It's an annual survey of the land industry professionals across the state of Nebraska. These include agricultural appraisers, certified general appraisers, farm and ranch management companies, as well as real estate brokers across the state. As part of this report, in the preliminary estimates, the two major things that we will be publishing include preliminary estimates on land values as well as cash rents. We divide the state of Nebraska into 8 major regions and provide averages as well as ranges for the averages on the cash rents. And we follow the major types of land and the major types of cash rental rates that commonly are negotiated, or you could follow the statistics related to the prices on. And in last year's survey, each of those 8 regions you talked about saw a decrease in farmland values, about 3% on average from the prior year. Are we seeing similar trends this time around? Yeah, so the percent change or the decline in the market value, some of the regions were more or less than 3%, but the main point being, on average across the state of Nebraska, the average value, the average market value of Nebraska farm real estate has roughly declined. And it's continued a gradual decline since the peak of about 3% compared to the prior year. And does that decrease come mainly from cropland, land for livestock, a little bit of both? What's the breakdown? Breakdown across Nebraska, we've seen a little bit higher decline in the land classes that serve the cow-calf industry. So this would be either grazing land or hayland, and followed by dry land, cropland, and a fairly marginal decline in our irrigated land classes. So that would be either center pivot or gravity irrigated cropland. And what bearing does this have on crop and cattle prices? You know, the better way to take a look at it, the value that we have related to an asset, whether it's a car, piece of equipment, or agricultural land, rental properties, whatever it might be, the value of what we're producing relates to the value of what we have. The value of what we had is going to be influenced by the bids that go on related to cash rent, market value of land, whatever it might be. It's going to be influenced by the value of those commodities. Continued declines or continued margins related to the pressure of budgets and some of these things, as long as we continue to see that pressure, we might see further declines in the future. The big thing being, we're seeing a gradual decline. Anytime we see a gradual change in the asset value or a gradual change in general economic forces, obviously it's tough for many operators and landowners across the state, but it's, in my view, might be a little bit more favorable than some of the extremes we've seen in history, and some of those extremes were in the 1980s. So gradual declines that reflect the overwhelming market forces, land values, cash rents, declining commodity prices or lower commodity prices, those eventually get reflected into the value of those assets.
Any other significant changes across the 8 regions that stuck out to you?
In addition to the land values, we also follow cash rents. In the cash rents, we've seen a gradual decline across the majority of the regions. There were certain regions, and if the viewers would like to take a look at our publication, you can see the actual changes. But generally speaking, cash rents for cropland are down, as well as grazing land on a per acre basis. Cow-calf pair rental rates were a little bit more mixed. And when I say mixed, we had a change or a rate of decline. There were a few areas they were up and there were a few areas they were down. What was noted by the survey participants relate to the factors of if the landowners are willing to provide a degree of care, meaning in essence, are they almost taking the cattle in, or are they willing to take care of things such as fencing, weed control, guarantee a water source during the grazing period, things of that nature would relate to care.
And what are some other concerns from landowners that were addressed in the report?
Sure. So the land industry professionals that take the survey have firsthand knowledge of engaging with landowners, tenants, whoever it might be. It might be related to land purchases, cash rent negotiations. If you maybe are a banker, you have a line of credit, you're obviously aware of where the money's going. So these folks are fairly well in tune with what's happening. That being said, two of the biggest concerns, we have a simple scale from 1 to 5, 1 being negative, 5 being positive, 3 being neutral. We asked about 20 different economic forces influencing land values. And leading into 2019, the 2 most negative factors, and these are preliminary, so they might change, but the 2 most negative things we see noted were current property tax levels and the outlook for future property tax policies, which are obviously a major concern for many folks across the state. That was one thing that stood out more so than almost anything else in the survey, was relating to those 2 forces.
You can head over to agecon.unl.edu/real estate to read the full report and get a complete breakdown of the numbers. We've also posted everything on the Market Journal Facebook page. Moving on, and one could say the future of solar power is very bright, pardon the pun. Solar news from just this month includes designs released for a car partially powered by solar energy, a Florida power company's plans to build 4 new solar plants, and China's goal to build a solar power station in space by 2050. Nebraska Extension Educator John Hay is our resident solar expert. He came by the show to give us some solar updates in the ag industry.
Well, solar has had some interesting thing happens in the past year. One of them is the new tariff on solar panels has come into effect, and really the price of solar panels went up prior to that tariff because there was a lot of fear of that tariff raising the price of solar panels. And then actually the price of solar panels has come down because really the tariff wasn't as high and as extreme as the industry thought it was going to be. And so that's a good thing in the fact that the price of solar panels has come back down to fairly low levels, enough that the price of solar has declined almost to what it was before the tax tariffs went in. And that's powerful for anybody trying to purchase, because that means that the price of solar has gotten to the place where it's becoming more and more competitive.
Do you see solar power as something that agricultural producers are interested in?
Particularly agriculture producers in some other states that have a little higher electricity prices are very interested. And then in Nebraska, it's a little more varied. Part of it is we have some low-cost electricity that is good for us, but also if you're trying to generate your own, it's a challenge. And that allows really the people that are interested are people that have other motivations, maybe motivations of being more green or clean energy, motivations of being more independent. Those types of motivations are the people we really see trying to jump into this type of thing.
And then I think that on-farm solar power, that's pretty interesting too. Could you kind of give us a quick refresher on what that is and why it'd be something that a farmer may want to consider?
Well, this is something that there are some tax benefits going on with solar. So a person who puts in solar right now can get a fairly large federal tax credit, but also a business, a farm or small business or any other business, can also depreciate that asset. And those things all help bring that price of the system down. And then the paybacks are getting low enough that they are of interest to people. And so a farm that wants to reduce their cost of electricity, their operating costs, might consider putting this in, taking those tax credits, and then once that thing's paid off, they're going to have some lower bills over time.
And how would a farmer get started on that? And how would they know if it's worth it in the long run cost-wise?
I think it's really important to do a detailed economic analysis, and I help a lot of farmers and businesses run those analysis, not only in Nebraska but in some other states, working with some of my colleagues. And that detailed economic analysis is so important because there's so many assumptions that sometimes when you talk to some installers and others might give you some very maybe rosy assumptions, and I think those more conservative assumptions are a good way to go. Your eyes wide open, you know you have a high chance of that falling in a range of a certain economics that you're willing to go forward with. So good analysis is really where to start.
And 2019, important year for the federal tax credit. Could you speak a little bit on that?
Yeah, that federal tax credit is 30% of total installed cost, which is really important. If you put in a system that was $10,000, you'd get $3,000 in a tax credit, or scale that in any size you want. But that federal tax credit is reducing at the end of 2019. So any system that goes into service after the end of 2019 does not get the 30%. It actually gets 26% in 2020, and then it goes down again to 22%, and then 10% over the next 4 years, and then eventually down. It stops at 10% for businesses, but residences it goes to 0. So this 2019, maybe even into 2020, a little beyond, is really when you want to consider this if you are for the best, because you get that tax credit.
We'll have part 2 of our conversation with John next week, where we'll discuss leasing farmland for solar power. It's that time in the show now where we take a few minutes to focus on what's happening in the markets. And Dr. Scott Brown is our market analyst this week. He's the Director of Strategic Partnerships for the University of Missouri's College of Agriculture, Food and Natural Resources. And we always love to hear what he has to say with what's going on in the world of agriculture. And starting off, Scott, could you give us an update on what you're watching on the trade front? We haven't talked much regarding the USMCA deal lately.
Yeah, so I think that's still one of the front and center issues for 2019. We do need a new USMCA agreement in place, and you know, I continue to remind us that getting tariffs down on things like hams going to Mexico could really be important, especially for the pork industry, as we're talking about large supplies of pork on the marketplace today. We'll see how Congress handles USMCA, but it looks like at this point we will see a successful conclusion to USMCA as we go through 2019.
And I also read an article where you were stressing the importance of trade with Japan. Why do you think that's so important for this country?
Yeah, you know, you look back at exports of beef out of the United States, Japan was certainly one of those countries extremely critical to us in 2018. But as I look ahead, I just keep reminding us that, you know, we face a tariff of roughly 38.5% on many of the beef muscle cuts that are going to Japan. You look at some of the other countries that we often talk about as our competitors, and I pick Australia. You know, they're already setting at 28%, and with trade agreements they have in place with Japan already, those tariffs continue to fall to 9% as you look long term. We need to be competitive in terms of tariffs our own product faces going into Japan, because that market's going to grow in front of us, and that's really a high quality market, and we know U.S. beef is certainly one of those high quality products. So I think a successful U.S.-Japan agreement at some point down the road is really important. You know, I sometimes say thank goodness Australia's had some dry weather and now some flooding issues that have really kept their domestic supplies in check. Otherwise, I think they'd be much stronger competitors for us.
Yeah, Scott, and with all that talk about Japan makes me think about how important the relationship is with Nebraska and Japan. And moving on, I also wanted to get your thoughts on USDA's 2019 farm income estimate. When we were talking before the interview, you told me this is a pretty interesting topic for livestock producers. What were some of the numbers in this report that stuck out to you?
Yeah, overall, when you look at just total livestock cash receipts that USDA is suggesting for 2019, which the report they turned out last week was their first estimate for 2019, up $4.6 billion in livestock cash receipts. A fair amount of that was increases in dairy cash receipts, but also they had cattle cash receipts up $2.7 billion in 2019 relative to 2018. You know, that's combinations, I guess, of both higher prices and additional cattle slaughter as we look ahead here in 2019. I even look at the hog side and I go, we know we've got a lot of supplies of pork to deal with this year and likely lower prices. You know, USDA was only down $700 million when you look at pork cash receipts. I think that's also pretty strong demand indication, just given the increase in supplies of pork being brought to the marketplace this year.
Yeah, and staying on the topic of hogs, we have a story on next week's show where we'll give some updates on African swine fever and how that's impacting the pork industry. Why is this a topic that people should care about?
Yeah, Troy, you only have to look a little bit at what's going on in China to say this could be just the biggest issue we face in 2019. You think about a country with 40 million sows roughly, who has had at least officially reported over 120 cases of African swine fever to date, and you see those out there suggesting upwards of 25, maybe even 30% cuts in Chinese pork production. If we see that kind of cut, the ability for Chinese pork production to cover the domestic demand that's out there, I think will be difficult, which suggests some of us are going to get a chance to trade more products into China. The Chinese might actually want to buy some U.S. pork, especially when you think about what's traditionally been a big soybean market for us. African swine fever may curb the interest, some of the interest in growth in soybean trade to China. They might be more interested in U.S. pork under this scenario. I remind us that we sure don't need African swine fever here in the United States. That could be the other side of a very tough situation if that were to unfold.
Definitely something we'll continue to track, impacting a lot of the sectors of ag for sure. So as we let you go, our viewers love it when our market analysts give marketing advice or risk management tips. What are a couple of the top things on your mind that you want to make sure producers know about before we let you go?
Yeah, so I guess I start maybe with where folks don't think about these days. You know, corn prices have been down the last couple of weeks. When I look at futures markets, I think it's always not at top of mind when we've had lower feed costs to think about locking in those feed costs, but it has been an opportunity for lower feed costs to maybe be locked in through 2019. You know, I look at what's been happening in hog futures markets these days, where we've seen a pretty good rally the last week and a half to 2 weeks. It might be an opportunity to let someone else have some of that risk about whether hog prices go higher or not. I'm certainly looking for opportunities to lock in a floor without giving up some upside potential, of course, given that ASF could still be a large market mover. But laying off some risk might be good. Even on the cattle side, you know, I often talk about it, to me right now, when I look at markets, they're sideways on average. But maybe there's a little more downside risk than upside potential. Using some of those risk management tools to, again, let somebody else have some of that risk of downside price moves might be important as we go through 2019.
Dr. Scott Brown from the University of Missouri, we appreciate you taking the time to speak with us today. We'll do it again soon.
Thanks much, Troy.
Next week, we'll be joined by analyst Elaine Cubb. She'll share her opinion on the latest news in the crop market. So if you have a question you'd like for me to ask her, email us or get in touch on social media, and I'll pass your question along. When you think of soybeans, western Nebraska may not be the first place that comes to mind. However, it's not uncommon for irrigated growers in southwest Nebraska to plant soybeans in rotations with corn. Strahinia Stepanovich is a Nebraska Extension Educator in Perkins County and says it's worth considering planting soybeans first. In 2018, Stepanovich evaluated the effect of several factors when planting soybeans in western Nebraska, including planting date and population. Read about the results of the first year of this study in the March Nebraska Farmer. Time now for weather with Nebraska Extension Ag Climatologist and Market Journal Chief Meteorologist Al Dutcher. And Al, spring is in the air. We're less than a week away. And depending on where you are in the state, it may or may not feel like it. I know folks are definitely wanting to get back out in the fields, though. How are we shaping up this week?
Well, Troy, it's been quite a week, and you know, we were looking for some spring weather. We got the spring weather. Unfortunately, we got the rain on top of the snow, and we have had an absolute mess across a substantial portion of the northern half of Nebraska. And we really don't know completely what the total losses are going to be as basically the flooding is still ongoing and is expected to, as we go through this weekend, to gradually move that storm surge all the way down into the Missouri River into the southeastern Nebraska. And we should start seeing some reprieve from the very high waters in north central and northeastern Nebraska. Unfortunately, we lost a lot of roads, we've lost a few bridges, a lot of flooding to houses. We don't even know what our losses are to some of our cattle. It just is calving season. So basically, I think that we're probably looking at somewhere in the $50 to $100 million range in damages, and probably could be even more than that. This is just a general assessment based on the damage reports we've had so far. Now, for the good news, it does look like we're going to get a reprieve from this precipitation. So if we took a look at the upper air charts, here's that trough that was responsible as that low came out of the southwest, exploded, moved up to the Great Lakes. Now we have a general trough and a northwest flow aloft. That's a dry, basically, flow in the atmosphere, surface high pressure in control, and it will be in control for the remainder of this weekend. You'll notice it's just a scattering of flurries, and a lot of this is associated with the backside of the storm moving up the eastern seaboard. And this trough diffs a little bit farther as we go into Sunday. A little bit cooler air into the northeastern and eastern portions of the state with high pressure pushing into our region. But overall, it's still going to be a nice weekend as we don't see any precipitation, and temperatures should be slightly below normal to around seasonal totals. And then this trough starts to push off on Monday to the east, and that's going to allow a little bit warmer air as this high pressure currently shown Monday morning to be centered to the north of it starts to slide toward the southeast, and that's going to bring southerly winds on the backside of it. All the precipitation remains to the east of us. As we go on the day on Tuesday, the ridge pushes in a little bit farther to our east. That's going to allow a little bit warmer air, and we should be in the 50s and maybe some 60s in southwestern Nebraska. In the snow-covered area is probably going to be a little bit cooler, but high pressure firmly in control. A little bit of precipitation shown in the southern Rockies, but it doesn't look like anything major. By the time we get to Wednesday, now the center of that ridge starts to lay over most of the western two-thirds of the state. So it's a very nice day on Wednesday, probably 50s all the way around the state with some 60s in the southwest. High pressure firmly in control. No precipitation, all of us to the eastern seaboard. As we get into the day on Thursday, now we start to see some troughing coming into the western United States, particularly the southwest. It looks eerily similar to the path that was taken from this previous storm. Surface low starts to develop as we get into southwestern Kansas. That will try to feed some moisture up, but because it's way ahead of this trough, most of the area will be concentrated over in the southwestern United States. Then as we get on the day on Friday, we start to see a little bit of energy trying to shift out of that upper air low of the southwest. We see a surface low developing in north central Kansas. I don't think we're going to have enough time to get deep moisture into our region, but enough to get some precipitation going on Friday. What we will be watching for is that the main piece of that energy comes out later in the weekend to the early part of next week, whether or not we will see a significant weather maker. But for right now, the first time we can show this, 8 to 14 day forecast next Thursday, the following Tuesday, above normal temperatures for the Central Plains. In regards to precipitation, just a slightly above normal chance of moisture with that low coming out late next weekend.
Thanks, Al. For our final story today, let's step into the sometimes confusing and often daunting world of grain marketing. Nebraska Extension Educator Jessica Groskopf has a name for the anxiety you feel about marketing grain. She calls it the marketing mind game. She came by the show to offer some tips.
I think this has been a really interesting year for the grain markets. You know, we had a really interesting summer as we watched the trade war with China unfold, and now the market has kind of been sitting stagnant since harvest and really hasn't had a whole lot of movement, which we normally expect after the first of the year. So I think there is a little bit of anxiety as we're trying to see what the market is really going to give us this year, and that does cause some anxiety. You know, if you put grain in the bin unpriced, it's kind of been, especially the corn market, has been moving sideways and flat. And so, you know, how do you determine what the best move is for your operation? And that does, you know, kind of get in your head a little bit about whether or not you made the correct decision putting it in the bin unpriced.
And you have some things that we can do to reduce that anxiety, and that probably starts with being satisfied with the decisions you've made and not beating yourself up about it too much.
Yeah, so when I talk to farmers, you know, they always say, boy, I wish I would have, or I made the wrong move. And really, when we talk about grain marketing, there aren't wrong moves. We all make grain marketing decisions for various reasons, and when we make those decisions, as long as we made them for solid reasons, either stopping storage, or not having the logistics to move that crop later in the year, whatever it might be, we have to be satisfied with those decisions, even if they didn't result in the highest price possible when we took that grain to the elevator.
And there's so much information out there, some might even say information overload. What can we do in that regard?
What I like to tell producers is to find 2 or 3 trusted sources of information and just follow those 2 or 3 sources. If you're listening to every market expert out there, you're probably getting mixed signals. So find those 2 or 3 that you really relate with, that you understand and that you trust, and that way you're not overloaded by market information.
And I would think it's probably important to be realistic about the market too, right?
Absolutely. You know, this year we've been talking to farmers, and the comment that comes out of their mouth pretty often is, if corn was just $4. And having that expectation, it might get there. But in terms of cash price, I don't think that opportunity, if it exists, is going to exist for very long. So having that realistic price target is really important, because I could be making some solid sales right now at $3.60, and that would be a good opportunity for me to lock in some profit for that corn that will be harvested this coming year.
And finally, you talk about writing a grain marketing plan. This seems like a really big one to me.
Yeah, I'm surprised at the number of producers who haven't actually sat down and wrote a grain marketing plan. And that plan should include both date targets as well as price targets. And that really helps you walk through the marketing process and set some goals, so that when you see or you hear what the current price is, you have something solid to gauge that price against. And also understanding and thinking through, is that a good price? Is that a good basis value? Is that a good futures value? And what type of action did I say I was going to take when I saw that price? So having that grain marketing plan written out is a really great way to make good decisions and not regret the decisions that you've made.
All about making those good decisions. Thanks again to Jessica for coming on the show. Well, that's going to do it for this week's episode. Hope to see you right back here next time. Until then, I'm Troy Moeling. Thanks for watching.
Join Market Journal online at marketjournal.unl.edu. You can also follow us on Twitter, Instagram, and Facebook. Promotional support is provided by the Nebraska Farmer Magazine. Market Journal is produced by the University of Nebraska-Lincoln's Institute of Agriculture and Natural Resources.